Welcome to the Rick Ellis Real Estate Show, my weekly Sunday night edition. I'm going to talk a little bit about some of the moves that the Federal Reserve made this week, and then we're going to dive into some Arizona numbers like we normally always do. Talk about mortgage rates, of course, but we're going to look at other things as well. So stick with me. You'll know a lot about Arizona real estate, and not only will you be armed with knowledge, but you'll be a hit at all the upcoming holiday parties. So be sure and hit that like button. Do me a favor there. What's going on? Fed is about to start boosting financial markets again, and here's why. And this gets interesting. It says investors only focused on interest rate cuts may miss another important move right on the horizon. Now, before I go any further, I want to tell you, I got a phone call from a really good friend over the weekend asking me about the rate cut and what do I think. There are going to be more rate cuts in December. And I basically said, just get with your lender and have them stay on top of it. You're going to drive yourself nuts because whether or not the central bank makes a cut 2.50 or 50 is probably not going to have any impact on what you're trying to do. He's trying to refinance a project that he's got. I said, there's so many other moving parts. And this article really, I think, sums it up a lot. And it said, investors focus on the Federal Reserve's midweek policy decision to cut interest rates by a quarter point and on the chances of no further rate reduction in December may be overlooked. Another critical development set to occur in the final month of this year. It said it will soon end its efforts to shrink its now roughly $6.6 trillion balance sheet under the program known as quantitative tightening, or QT, which began in 2022 as a way to supplement inflation-driven interest rate hikes. So it said it kind of surprised people a little bit, and it said ending the program as of December 1st is just another way for Fed officials to ease financial conditions, albeit through different channels than a rate cut would. That's important. We're all concentrating on that rate cut, but in the background, I don't know, I watched Michael Zuber. He said, you can hear the printing press warming up. Changes to the Fed's balance sheet impacting the plumbing of the financial system in a way most investors aren't likely to notice until something breaks down. But there is something that everybody noticed this past Friday or over the weekend. I'm going to pull it up here on this chart. I want to make sure I've got the right look on it, and that is the overnight reverse repo market. You've heard of it. Hard to understand what it is in a lot of cases. And I'm trying to pull it up here. Here we go. So they injected $50 billion into it right here, 51802 on Friday night, overnight. And you look, so on the news, you're going, oh man, that's really something. Well, they did that at the end of September, $56 billion. And over 5 years, they've certainly done a lot more. In 2022, $2,553 billion. So they've been a little busy in the overnight market, repo market. Now, what is that? Want me to explain it to you in my simplest of terms? It's a dad that's got a kid in college, and he injects a bunch of money in their checking account on Friday night, October 31st, and sends him a note and says, I saw you were low on money. Have a good Halloween. Pay me back Monday. And if you can't pay me back Monday, then pay me back when you can. If you can. You don't have to. We'll see. That's the overnight repo market. They're trying to keep liquidity in the banking system. So dad sends money to the kid. Kid comes back Monday, pays him back. Monday night, hey, dad, need some more. Dad injects some more, goes on and on. The trick to this, not the trick, but the thing as this starts to hit the news is just watch it. Is this a one-time thing that just happened at the end of the month? Is it more than one bank? Is it a bunch of banks? Is it continuing or is it growing? Well, they've come out and said that they're going to be starting to loosening up credit, adding more liquidity. And you know what that means for real estate prices if that happens on a large scale. I mean, those sitting around saying, I'm priced out, this is awful, I can't get into a house, probably not going to see a lot of relief. That just happens when you get periods of higher inflation. Hard assets go up, like it or not, whether or not you can get into the market. Now, I know I'm going to get the crud beat out of me going, FOMO, he wants you to buy now. I'm just telling you what that means in the financial markets. Quantitative easing means more money, more liquidity, probably higher inflation, Gold goes up, silver goes up, collectibles go up, equities go up, commodities go up, real estate goes up. We'll see. Who knows? Everybody's watching like crazy. Here's our active listings. You can kind of see that they're kind of ebbing right there a little bit. And I'm seeing that in my 7-day moving average, mostly because you can see how the yellow line took a big dip down here. Over 1,000 expireds. End of the month, or the first of the month, boom, the expireds rolled in. New contracts ticked up a little bit. We're about 2,780, almost 2,800. Not a big jump, still kind of hanging in where we've been, 2,700, 2,600. New listings took a big dive. That's going to show up here next week. Going to be slightly lower. Not really feeling it today. Doesn't really mean anything since it's already going in to a seasonal downturn for our market. Mortgage rates did go up from 6.13 to 6.28 on a national survey on an average. Not alarming, just moved. Every time they announce a rate cut, rates go up because they price it in ahead of time. Here's our annual average price per square foot. Certainly doesn't look like anything that you can make any hay out of, right? It's just a straight line, just like it was a straight line last year. Here's the 2021 went up. Here's 2022 went up. So nothing going on to say, wow, look at that. Here is the number of price changes per week. Now, this is the number of price cuts. We had about 2,900 October 10th, 2,691 October 26th. So people are cutting their prices the closer and closer that they get to Thanksgiving. I think you're going to see that come up the next week or two. Then after that, they're probably just going to pull it for the holidays. Get Thanksgiving, go, nope. Now, I would not pull your listing off for Thanksgiving weekend. Realtors that do open houses will tell you that the Friday after Thanksgiving is one of the busiest open house weekends of the year. Now, does that make it productive? Does that mean there's more buyers? No, there's more foot traffic because you got people visiting from other states down the street. The son and the dad go, let's go look at some open houses while my wife and mom are out shopping. So everybody else doing their Black Friday thing, they go out. I meet people from all over the country if I do an open house Friday after Thanksgiving. So there is foot traffic. And with foot traffic, you increase your chances. Although the chances of selling a house during an open house is about this big. Makes you feel good seeing all these people walking around inside your house. Makes realtors feel great because they go, oh, you don't like this one? Let me help you find another one. So they build their buyer pool inventory with open houses. But I wouldn't remove it. In fact, as long as you're listed, I'd leave it on the entire holiday season. I had my house listed in Fountain Hills. I listed it Christmas Eve and had an offer on New Year's Eve. People that are out shopping then are serious. Your foot traffic is terrible. Nobody's going out there. But the ones that do, they have to move by the first of the year. They're serious. It may be a job relocation, maybe anything. They just have to get into a house by January. So they're opening up doors. If you wait till January, everybody else is waiting until January. And then now you're going to be competing with a lot of other listings. So if you can bear it, you can put down that you want 2 days notice for somebody to come to your house so that they're not calling you Christmas Eve morning. Hey, I want to see your house. You can block out what days you want them to visit. So you've got everything's on your side as far as foot traffic to your house. You're the one driving the bus. Here's the Cromford Market Index starting to take a slight downturn. That is a total index that's sitting right now about 78. So it's registers as a buyer's market in total. Not everybody is in the buyer's market, as you can see here. Fountain Hills is 157, Paradise Valley 138, Chandler 129. I send this out every Monday morning at 7 a.m. in my newsletter, along with their commentary, mortgage rate analysis, detailed market report, and it's very mobile friendly and a lot of clickable links on there if you want to take a look at that. That's the only email that you will get all week. It doesn't add you to a spam list. You just sign up for the newsletter and you'll get this on Monday mornings. Like I say, it's very mobile friendly. You can see that everything down to Phoenix is considered a balanced to seller's market, meaning, inventory versus supply or versus demand is leaning more towards seller's favorability until you get the Buckeye, Queen Creek, Maricopa down there in the bottom, 46.3. That is definitely, beyond the shadow of doubt, buyer's market. Where are we at with our listing success rate? Well, look at that. It actually went up to 71. It was about 69. Overall, listing success rate for our market hovers around 69. So 71, not bad. Most of that's occurring in the higher end above $1.5 million homes. This is total market. I could filter that through here and bore you to tears, but trust me. We've got here our months of supply is still in what you would consider a normal range, although we haven't seen normal in it seems like forever. But here we are at 4.4 months. If you take it out, and if I were to add what I call the silly seasons, which is 2021, you can see that we got down to a half a month supply. Now, those of you that are telling that interest rates go down, we're going to see bidding wars. You're going to have to tell me how we're going to go from 4.4 months down to less than a month in that short period of time. The rest of this year is going to be slow. Sales are not picking up. There isn't any catalyst out there for them to pick up. It's still enough in some markets for you to get your house sold. You're going to have to contribute towards closing costs. The average is about $10,000, but those that are finding success. There are some neighborhoods where it's incredibly tough to sell a home. So speak with your agent. If you want to get a zip code report for your area, click the QR code up there or the link down below. I'll send you a detailed report on what's going on in your neck of the woods. And then anything else that you want to know, let me know. But I guess what I'm saying is the rest of the year, slow is as slow goes. That's just the way it's going to be. January and February, I don't think anything's going to pop unless, and this is the canary in the coal mine, what's going on with that repo market? How much looser is the Fed going to be? How much money is going to get printed? That's what you need to watch. Are we going to be juicing things up for the first of the year? I don't know. We're in a government shutdown right now. Nobody really knows anything. We're driving in the fog, as Chairman Powell says. So it's just what's going on. I expect that the government shutdown is going to end after the upcoming elections. Everybody's just stand put, standing their ground. After the upcoming elections, they'll gather in a smoke-filled room and solve things, kick the can down the road a little bit further. We are the government. We are here to help.